大家好，我是 Min，感谢大家对富达的支持。今天将为大家更新日本市场相关资讯。Hi, my name is Min Zhang. I am the lead portfolio manager of the Fidelity Japan Value Strategy. Why Japanese equities now? We think the Japanese economy and markets are attractive today for three key reasons. One, the Japanese economy is finally exiting decades of deflation and is now entering a mildly inflationary environment. Two, earnings growth remains solid, with market valuations attractive, while at the same time, the Japanese market remains under-owned by many investors. And three, after years of steps to improve corporate governance, the Tokyo Stock Exchange reforms are driving positive governance and capital structure changes. The chart on the left shows Japanese consumer price inflation year over year. As you can see, after decades of suffering from deflation, the Japanese economy has entered a phase of moderate inflation. Although the rate of inflation is easing, we think the current trend is durable, in part due to structural labor shortage from an aging population. The right chart shows Japan's GDP in blue, plotted against Topix Stock Index in orange. Japan has returned to nominal GDP growth since 2012, and after a brief slowdown during COVID, it is expected to continue strong growth. Here we show 12-month earnings per share forecast for major stock indices, such as Japan's Topix in blue, US S&P 500 in orange, and MSCI Asia Pacific ex-Japan in purple. Note that since Abenomics started in 2012, Japan has seen very strong local currency EPS growth at a rate which exceeded even that of the S&P 500. Here we show the 12-month forward price-earnings ratio of various global markets on the left and price-to-book ratios on the right. Japan is highlighted in blue. Due to the strong fundamentals driving earnings growth, PE valuation of the overall market remains attractively below that of the United States, and on PB basis, Japan remains one of the cheapest global markets. Despite these fundamentals and valuations, Japan remains a market which had been and continues to be under-owned by global investors, as illustrated on the left. On the right, you'll see that Japanese domestic households also have a lower percentage of their wealth invested into financial assets compared to the US and Europe. The return of inflation to Japan means high cash savings will increasingly lose value over time. And coupled with the government's encouragement, there is room for Japanese households to invest more into financial assets. Finally, similar to Japanese households, Japanese companies also tend to have excessively strong balance sheets. The left chart shows that 60% of listed companies in Topix have net cash balance sheets compared to under 20% in the US and Europe. There are many companies valued cheaply due to low return on these lazy balance sheets with poor awareness of cost of capital. The right chart shows that nearly 50% of listed companies in the Tokyo Stock Exchange are traded below book value, compared to 10 to 20% in the US and Europe. After many steps to improve corporate governance in Japan, and with the Tokyo Stock Exchange's new directive to companies to assess their own return versus cost of capital to improve efficiencies, we are seeing more companies changing the situation. Fidelity International has been in Japan for over 50 years. With more than 20 investment professionals, we conduct over 3,000 company research meetings or calls, and our team outputs 2,000 plus research notes per year. As a result, over 80% of the Japan market is actively covered by our internal research. And this is the primary generator of ideas and the source of alpha for the value strategy. Here we look more closely at the team surrounding the portfolio manager. We have a strong team of fundamental analysts who are the primary source of our investment ideas. Our ESG specialists conduct company engagements where we see potential to improve corporate governance. I also work closely with our traders to source liquidity and rely on their best execution. The strategy takes an investment process comprised of 3 major steps, from left to right: idea generation, in-depth research, and portfolio construction. Out of the 4,000 stocks listed in Japan, the investable universe for the strategy is closer to 1,000, considering liquidity constraints. Initial ideas come from both in-house and external sources, or stock screens focused on valuations. The core of our investment process lies in the in-depth research done by our analysts. We take time to meet companies directly to better understand their businesses and forecast future value. Each analyst actively covers between 25 to 35 stocks at full capacity. And thus, at any given time, there are approximately 300 stocks under active coverage by our Tokyo team. From there, the strategy incorporates 50 to 70 stocks with position sizes between 50 to 500 basis points active bet, taking into consideration risk-reward, conviction level, and liquidity. Overall, the strategy aims to have a price-to-earnings ratio below that of the TOPIX index and a price-to-book ratio in line to slightly below. The strategy takes a valuation-aware approach that maintains its overall value tilt, looking for companies that are undervalued relative to growth potential, cash flow generation, or balance sheet strength. The strategy has a pragmatic flexibility to invest in a wide range of industries and market cap ranges, including non-traditional value ideas such as semiconductors or robotics, where relative conviction is high. The chart here plots the value strategy versus the index and a group of peers along the axis of market cap and style. As a result of the investment process, the strategy maintains a value tilt while not necessarily being deep value. We think Japanese equities are attractive as the Japanese economy has entered a new phase of mild inflation, supported by structural wage growth. Japanese stocks remain under-owned despite strong corporate earnings growth and reasonable valuations. Meanwhile, companies are improving their governance and capital allocation policies. The Fidelity Japan Value Strategy aims to capture alpha under this environment by leveraging the expertise of both our global and local research teams. The strategy has a value-style tilt, while having the flexibility to invest in non-traditional value ideas where we have high conviction.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。